Why the rich love recessions, and you should too. Why do the ultra-wealthy always come out richer after every economic crisis, while everyone else gets crushed? It's not luck, it's not insider trading. It's because they understand one truth most people never learn. Recessions don't destroy wealth, they just transfer it. From the fearful to the prepared. Look at 2008. Millions lost their homes. But the rich, they bought entire neighborhoods at 50 cents on the dollar. 2020 pandemic, average people panicked and sold. The wealthy deployed billions and doubled their net worth in 3 years. The next recession is coming, maybe next year, maybe in 5. And when it hits, it'll do the same thing. Move billions from those who panic to those who prepare. Today, I'm breaking down the 6 principles the wealthy use to profit from downturns, and how you can apply them even if you're starting small. Hit subscribe and comment "Recession Ready" right now, because what you learn today could completely change your financial future. Let's start with why most people destroy their own wealth. Principle number 1, the psychology of panic. Why people destroy their own wealth. Here's the brutal truth about recessions. Most people don't lose money because the economy collapses. They lose money because they panic and destroy their own wealth with emotional decisions. When a recession hits, your brain goes into survival mode. You see your portfolio bleeding red. The news screams disaster. Your neighbors are losing jobs. Your primitive brain, the same part that kept your ancestors alive when they saw danger, takes over and screams one command: escape. So you sell everything at the worst possible moment. You lock in losses that were only on paper. You guarantee you'll never recover. The average person sees a recession and thinks of scarcity. Everything's falling apart. I need to protect what little I have. Fear takes over and they make decisions they'll regret for decades. But the wealthy? They see the exact same recession and think abundance. Everything's on sale. This is my opportunity. Same crisis, completely opposite response. Think about 2 neighbors during the 2008 crash. Both owned stocks worth $100,000. The market dropped 50%. Neighbor 1 panicked, sold everything at $50,000, swore he'd never invest again. Neighbor 2 felt the same fear, but stayed calm, kept his shares, and even bought more. By 2015, neighbor 1 was still sitting in cash with $50,000. Neighbor 2? His portfolio was worth $200,000. Same starting point, opposite mindsets. Here's what you need to understand. The rich aren't braver than you. They're not immune to fear. But they've trained themselves to recognize that the worst feeling about the market is usually the best opportunity. When your gut screams sell everything, that's often the exact moment you should be buying. Your move. Before the next recession hits, write this down and tape it somewhere visible. When I feel panic, I pause. When everyone's selling, I'm buying. Fear is not my advisor. Read it daily. Condition your brain now so when chaos comes, you have a response program that overrides panic. The people who win in recessions aren't fearless. They just refuse to let fear make their decisions. But that's just the obvious part. Because controlling emotions means nothing if you don't understand what you're actually looking at. Principle number 2. The knowledge gap, the invisible killer. Here's why most people get destroyed in recessions. They don't understand how money actually works. They can't tell the difference between an asset and a liability. They don't know how to read a financial statement. They don't understand market cycles. And when the economy is good, this ignorance doesn't matter because everything's going up. But the moment a recession hits, that knowledge gap becomes fatal. People hold on to garbage investments because they don't know they're garbage. They sell quality assets because they can't recognize value. They make decisions based on headlines instead of fundamentals. And they hand their wealth to people who actually understand what's happening. The wealthy spend years, sometimes decades, educating themselves about finance. They study market cycles. They learn valuation. They understand that a great company trading at half price is still a great company. So when everyone else sees chaos, they see opportunity hidden in plain sight. Let me tell you about two coworkers in 2020. Both made the same salary. When the pandemic crashed markets, Sarah panicked and sold everything because the world is ending. Her coworker James, who'd spent years reading about investing, looked at the same crash and said, "These companies still make products people need. They're just cheaper now." He bought. 18 months later, Sarah was still in cash, traumatized. James had doubled his investment. The difference? Knowledge. Here's the reality. When you don't understand how money works, the system eats you alive during recessions. But when you do understand it, when you can look at a balance sheet, understand cash flow, recognize quality businesses, you spot bargains while everyone else sees disaster. Your action step: start educating yourself today. Read one book about investing. Learn what makes a company valuable. Understand the difference between price and value. Take one free online course about financial statements. The knowledge you build now becomes your shield during the next crisis. Because here's the truth. Ignorance is expensive. But education? Education pays compound interest for the rest of your life. And what I'm about to say is what makes the difference between people who understand opportunity and people who actually have the power to seize it. Principle number 3, the crisis discount. Everything on sale. Recessions create the biggest discount event in the modern economy. Everything goes on sale, stocks, real estate, businesses, not because they're worthless, but because people are terrified. A house worth $500,000 gets sold for $300,000 because the owner lost their job and needs cash now. A solid company's stock drops 60%, not because the business is failing, but because panicked investors are dumping shares. The value is still there, the quality is still there, but fear drives the price down to levels that make no logical sense. The wealthy understand this deeply. They see recessions as Black Friday for assets. When everyone else is running for the exits, they're walking in with cash, calmly picking up quality at bargain prices. They're not predatory, they're strategic. They know that fear-based pricing doesn't last, and when rationality returns, prices recover. Think about the 2008 housing crisis. Millions of foreclosures flooded the market. Quality homes in good neighborhoods sold for pennies on the dollar. Regular people panicked and sold at a loss. But investors with cash and knowledge, they bought entire blocks, rented them out, and watched those properties triple in value over the next decade. Same houses, different outcomes based on who understood the opportunity. Here's what makes this principle powerful for you. You don't need to be a billionaire to take advantage. If you have $10,000 and a recession hits, you can buy stocks of solid companies at 50% off. When the market recovers, and it always does, you just made returns that would normally take a decade in half the time. Your move. Start identifying quality now. Which companies make products people will always need? Which neighborhoods have strong fundamentals? Do your research before the crisis, so when prices crash, you know exactly what to buy, while others are panicking. The rich don't create these opportunities. Fear does. The rich just have the knowledge and courage to act when everyone else is frozen. And now you understand the game. Wait, there's something you need to pay attention to if you don't want to lose everything. Because seeing opportunity means nothing if you don't have the weapon to seize it. Principle number 4, the liquidity advantage. Cash is power in chaos. Here's the mistake that destroys most people during recessions. They invest every dollar they have. No cash buffer, no reserves. They think holding cash is wasting money because it's not earning returns. But when the recession hits and they need money urgently, they're forced to sell investments at the absolute worst time, the bottom. They lock in losses permanently. The wealthy do the opposite. They always keep a portion in cash. Not because they're scared, not because they're conservative, but because they understand that cash is power during chaos. When everything's on fire, the person with cash is king. They can buy assets at panic prices while everyone else is selling to survive. Let me show you the math from 2007. Two investors, both had $50,000. Investor A put all $50,000 into the market. Investor B kept $20,000 in cash and invested $30,000. When 2008 crashed and both portfolios dropped 50%, Investor A's portfolio fell to $25,000 and he had no cash to buy the discount. Investor B's portfolio dropped to $15,000, but he had $20,000 cash. He deployed that cash at the bottom, buying quality at half price. By 2015, Investor A had barely recovered to $50,000. Investor B? Over $90,000. Same starting capital, massively different outcomes. The cash reserve wasn't dead money, it was opportunity money. Here's your reality. Liquidity is optionality. When you have cash during a recession, you have choices. You can wait for better jobs instead of taking the first offer. You can buy assets while they're cheap. You can sleep at night knowing you're not forced to sell at a loss. People without cash are trapped. People with cash are free. Your action. Build a cash reserve now. Keep 20 to 30% of your investable assets in high-yield savings. Yes, it earns less than stocks, but when the recession comes, that boring cash becomes the most valuable asset you own. Cash doesn't just preserve wealth during recessions. It creates wealth by giving you power when everyone else is powerless. But that's just the surface. What's behind it is what will startle people. Because having cash to survive is one thing, but having income that flows no matter what, that's real security. Which principle are you missing right now? Comment below. Cash reserves, multiple income streams, knowledge? Let's identify your gap together. Principle number 5, income insurance, the multiple streams shield. Here's the difference between people who survive recessions and people who thrive during them. Income diversification. The average person has exactly one source of income, their salary. When that job disappears in a recession, they're in a personal crisis. Game over. The wealthy? They have multiple streams. Dividend income from stocks, rental income from real estate, profits from a side business, investment returns, royalties. When one stream dries up, the others keep flowing. They're not just surviving, they're using the recession to buy even more income streams at discount prices. Let me tell you about Marcus and Jennifer. Both worked in tech. Both made $80,000 a year. When the 2020 pandemic hit, both lost their jobs. Marcus only had his salary, no savings plan, no side income, nothing. He panicked, burned through credit cards, and sold his small investment portfolio at a loss just to pay rent. 2 years later, he was still recovering. Jennifer? Same job, same salary, but she'd spent years building. She had dividend stocks generating $300 a month, a rental property bringing in $800, freelance work on the side adding another $500. When she lost her job, she didn't panic. Her streams kept her afloat, and while everyone was desperate, she used her emergency fund to buy more dividend stocks and another rental property at crash prices. She came out of the recession wealthier than she went in. The difference wasn't luck or income level, it was structure. Marcus had one point of failure. Jennifer had a system that couldn't be destroyed by one event. Here's your move. Start building your second income stream today. Rent out a spare room. Buy one dividend stock. Start freelancing for 2 hours a week. Launch a small online business. It doesn't have to be big. Even an extra $300 a month is $300 more than most people have when a crisis hits. Income diversification isn't about getting rich quickly. It's about building a financial structure so strong that no single event can knock you down. And during recessions, that structure becomes your greatest competitive advantage. It sounds simple, but the hardest part is what's about to be told next. Because having cash and income means nothing if you can't wait long enough to win. Principle number 6, the patience paradox. Time is the ultimate weapon. Here's the pattern that repeats every recession. The average person needs money fast. They can't handle watching their portfolio drop. They can't endure discomfort, so they sell early, lock in losses, and miss the entire recovery. The wealthy? They can sit through years of pain because they know something most people don't. Recessions are temporary. Recovery is inevitable. Patience isn't a personality trait. It's a strategic weapon. And it's only available to people who've built the financial cushion to use it. When you have cash reserves, multiple income streams, and no desperate need to access your investments, you can afford to wait. And waiting is how fortunes are made. Look at Warren Buffett in 2008. Middle of the financial crisis, banks collapsing, everyone terrified. He invested $5 billion into Goldman Sachs when people thought he was insane. The world is ending, and you're buying banks? But Buffett could wait. He didn't need that money next month or next year. He understood the cycle. A few years later, he walked away with over $3 billion in profit. That's the power of patience backed by capital. The average investor during 2008 sold at the bottom because they needed the money or couldn't handle the stress. They missed the recovery that turned $50,000 portfolios into $300,000. Same market, opposite outcomes. The only difference was who could wait. Here's what this means for you. Build your life so you never have to sell in a crisis. That means emergency funds, low expenses, and diversified income. When you're not desperate, you can be patient. And when you can be patient, you can be wealthy. Start today. Calculate how long you could survive without touching your investments. 6 months? A year? 2 years? That number determines your ability to win during the next recession. The longer you can wait, the richer you'll become. Patience isn't passive. It's the most aggressive wealth-building strategy there is. Because while everyone else is panic selling, you're calmly collecting their wealth at discount prices. Don't jump to conclusions. Because what comes next can change your perspective completely. The rich aren't just patient. They have systems that make patience automatic. The action plan, preparing for the next recession. All right, you understand the principles. Now let's talk about what you do today, not when the recession hits, but right now, to position yourself on the winning side. Step 1. Build your emergency fund. 6 to 12 months of expenses in cash. Not invested, not in stocks. Actual cash in a high-yield savings account. This is your survival layer. Without it, you'll be forced to sell investments at the worst time. With it, you can wait out any storm and buy opportunities while others panic. Step 2. Keep strategic cash reserves. Beyond your emergency fund, hold 20 to 30% of your investable assets in cash. This isn't dead money. It's opportunity money. When the market crashes and quality assets go on sale, this cash becomes your weapon while everyone else is tapped out. Step 3. Create a second income stream now, even small. Freelance for 2 hours a week. Rent out a room. Buy one dividend stock. Launch a tiny side project. The goal isn't to get rich from it. It's to build a backup system so one job loss doesn't destroy you. Start this today, not when you need it desperately. Step 4. Educate yourself relentlessly. Read one book about market cycles. Learn how to read a company's financials. Understand what makes assets valuable versus what makes them expensive. Take free courses online. The knowledge you build now determines what you see when chaos hits, disaster or opportunity. Step 5. Write your recession action plan today, not during the crisis when emotions are high. Write it now. When the market drops 20%, I will invest X dollars. When it drops 30%, I will double my contributions. I will not sell. I will not panic. Sign it, date it, follow it. Step 6. Automate your investing. Set up automatic contributions that happen no matter what you feel. Remove emotion from the equation entirely. The system runs whether you're confident or terrified. These 6 steps separate people who get destroyed from people who get wealthy during recessions. You don't need to be rich to do them. You just need to start now before the crisis forces your hand. Wait, the most important part is in the following story. Because knowing the plan is one thing, but seeing it work in real life, that's what makes you believe. The ultimate truth, you don't need to be rich. Here's the message that changes everything. You don't need to be wealthy to benefit from recessions. You don't need millions in the bank. You don't need a trust fund or family money. You just need to understand the game and be ready when others aren't. Small capital with the right strategy beats large capital with panic every single time. I've seen people with $5,000 deployed strategically during a crash build more wealth than people with $50,000 who panicked and sold. The difference wasn't the size of the wallet, it was the quality of the preparation. Think about this. In 2020, you could have bought shares of solid companies for a fraction of their value. $1,000 invested in March 2020, when everyone was terrified, could have turned into $3,000 or $4,000 by 2023. You didn't need to be rich to make that move. You just needed to be ready and willing to act when fear was loudest. The wealthy have an advantage. Sure, they have more capital to deploy. But that advantage means nothing if they panic. And your small capital means everything if you use it wisely. A person with $10,000, an emergency fund, a plan, and the courage to execute will outperform a millionaire who's paralyzed by fear. Here's what you need to internalize. The next recession will transfer wealth. That's guaranteed. The only question is, will it transfer from you or to you? Will you be the one panic selling at the bottom, or the one calmly buying quality at discount prices? You have time right now to prepare. Build your cash, create your income streams, educate yourself, write your plan. And when the recession comes, because it will come, you'll be ready. Not because you're rich, because you're prepared. This isn't about privilege or luck. It's about understanding the cycle and positioning yourself to win. The wealthy figured this out. Now you have to. All of the above will be meaningless if you miss the last detail. The next recession is your opportunity to change your financial life forever. Don't waste it by being unprepared. So there it is. Recessions don't destroy wealth, they transfer it. From those who panic to those who prepare. From those who react with emotion to those who execute with strategy. The next recession is coming. That's not fear, that's reality. Economic cycles repeat because human nature never changes. And when it hits, it'll do what every recession does. Move billions from the unprepared to the ready. Here's what you do right now. Build your emergency fund. Create cash reserves. Start that second income stream. Educate yourself. Write your recession action plan today. If you're ready to stop being a victim of economic cycles and start profiting from them, smash that subscribe button and comment recession ready below. Share this with someone who needs to hear it before the next downturn. What should I cover next? Drop your requests in the comments. The rich love recessions because they're prepared. Now you know their playbook. Use it. Your financial future depends on it.